Hello, everyone. I see many friends on the attendees, many sellers in the industry. So very excited to have this webinar today. Let's start with introductions. Maybe James is my co-host today. We've decided to do this webinar together. Maybe James, a few words about you.
Thank you, Yael. I'm James Thompson. Longtime Amazon employee and then Amazon agency owner. I've been involved with Prosper Show, which many of you may know, and today I advise investors and brands on how to make the most out of the Amazon channel.
Okay, thank you. My name is Yael. I'm from Fortunet, one of the co-founders. We started Fortunet in 2018. It's been 4 years helping sellers with their exit, medium and large e-commerce businesses, in particular Amazon businesses. And so over the last 6 months, we've been hearing there's a lot of talking around what's going on in the industry. Is there still a market? Are multiples dropping? Is it still a good time to sell the business? I just came back from a conference where most of the sellers didn't understand why I'm even talking about M&As, because all they hear is that nobody's buying, all the aggregators died, and multiples are, if they are, they're at 2x. So we've decided to have a webinar to kind of talk about what we see. And to do that, we decided to hear the voice of the sellers. So we decided to take 3 different sellers who sold at 3 different periods, 2020, 2021, and 2022 just now, so that we can compare their different experience, understand what they went through, hear tips from them, how to prepare, what to do to get the highest multiples. Those in this room got very good multiples, as you understand. So let's hear our sellers. Maybe let's start with Tony. So just a bit about you, background, when did you sell, and what you do today?
Sure, Tony Maibach, and I've had a career of bringing products to market, both sporting goods and technology, and got into Amazon in 2014. And we sold our business in 2020. It was actually late 2020 when we sold. And we were in the beauty category. And today I'm helping other brands scale their business and when they're ready for exit.
Janko?
Yeah, hi everybody. My name is Janko. I started selling on Amazon in 2016. I come from an accounting background. In 2021, I sold my brand in April, and after that, I was part of a transition period with a buyer, and then I also worked 7 months at an aggregator as a category director. I just started launched my new brand by myself. So back in the seat to grow something.
Congratulations. Ariel?
Ariel made my first sale on Amazon in 2017. I was involved in a lot of different entrepreneurial ventures before that, but then since making that first sale on Amazon, I've been focused completely on that for the past years. We sold our business, I founded it with a co-founder in early July of 2022, so just less than 2 months ago. Yeah. Now we've got another business that is already up and running that I'm kind of in a board of directors kind of capacity for, and probably staying involved in the Amazon space, but taking a step to take a deep breath and figure out my next moves.
What about a vacation?
Just got back from Greece a week ago. So,
okay, perfect.
Check.
Okay, so maybe let's start with kind of the process that you had. What did you do to prepare for the sale, and how do you know it's the right time to sell? So maybe Tony first.
Sure. Well, we were right in the pandemic, right? So throughout 2020, our brand really started to escalate. Our sales were improving significantly. And during that time for 6 months up to the point when we sold, we were starting to field calls of this new aggregator starting to ask questions about selling our brand. At first, we didn't feel like we were ready yet, and this is probably about 6 months prior to when we sold. But it did help us get a validation that there's a marketplace to sell our business. And we had intent to sell at some point when, of course, our financials were in a place that we felt we could get the valuation that we wanted. But at that point, that's when we decided we're getting to that place. And that was late in 2020. And we had, of course, our financials in place, but as well, we uploaded or up-leveled all of our assets, our imagery, our content. We created videos, and we essentially want to build out the brand to make it as strong as possible. And we also created a data vault, and that was just having all of our assets well organized in a data vault, as well as all of our production SOPs and our logistics processes. So we started putting those together, and that's kind of when we knew that we were kind of at that place and getting close to a place to sell the business.
Okay, thank you. Janko?
Yeah, in 2019, I went to a mastermind in Vegas, Triumph Turku Mastermind, and back then I didn't know that I actually had something that could be sold one day. And he laid out this groundwork, this formula. You know, if you do it this SDE, you should be getting a multiple like this. And he laid out the whole plan, and I was like, wow, okay. So that was kind of when I started, you know, really make sure that we get all of our financials correct, not just, you know, for the IRS, but for someone might buy this one day, everything needs to be in place. So started in 2019 already to make sure that, you know, everything is great. And end of 2020, you know, it started really, well, you know, I was in the health and personal care category. So we also saw a huge spike with COVID. And, you know, when you want to sell at the top, you know, as you're going like this. So, yeah, that's when we also revamped all of our assets, you know, new videos, new images for everything, trying to get it perfect, SOPs in place. And at that point, you know, VAs had been with me for 3 years. So I was kind of, you know, more in an innovative seat. So they did all the work. So I knew that, hey, not only, you know, we've got VAs in place to do the work. If someone buys this, they're buying like, you know, a well-oiled machine. So at the end of 2020, we really started putting our feelers out there to get into the, you know, to go to market.
Yeah.
Ariel, how does your story, Ariel, differ from these other two gentlemen?
I guess the biggest difference, I mean, a lot of similarities as far as preparing in advance and making sure everything was kind of set up in advance. We, you know, started working on it, you know, well over a year before our sale, which I thought was really important. But a big difference for us was that actually COVID really hurt our business. We were kind of in industrial and scientific consumables and just a specific product category we were in. We took actually a big hit during COVID. And so we knew we needed to wait until COVID ended to sell, you know, the COVID effect. And so once it did, we started seeing a really steady growth back on our business. And we knew that was a good time.
Tony, when you were first looking at selling your business, you know, there wasn't necessarily a broker involved or a banker involved, and you were already getting calls from random companies interested in your organization. Take us through that process around when did you know that, okay, I was actually ready, or you were actually ready to make a sale, to have a serious conversation about selling your business? You talked about getting things organized, but there's still a psychological point where you have to say, somebody wants to buy my baby.
Oh yeah, I would have to say we thought we would probably sell another quarter later as we're getting everything in place. But you know, we were a two-person team, my wife and Carol and I, and and a few outsourced consultants that were helping us. But we were kind of at that point where we either needed to hire and build a team and to expand the business and continue to grow, or start really considering an exit. And because they were reaching out to us, you know, everyone that essentially called, we would have a field of conversation and see where were their heads at, what were they thinking, Well, how do they see our business? And one of the conversations started becoming more compelling than the previous calls that I'd had. And I think that, as Carol and I sat down, we thought, well, is now a good time to sell, or should we continue to build the business? And it's very emotional, right? And I think that as the conversations transpired and we knew that our growth trajectory had been significant over 2020, that we thought we were right in getting into the sweet spot of when to sell the business. So that's why we decided to continue forward through the process.
Yeah, Janko, in your situation, you brought in some specialists to help you sell your business. How did you make that decision that the time was right to start engaging in those formal conversations?
I think we maybe I should say what I did a little bit differently. So this roadmap that was laid out to me in that mastermind said, if you're at this SDE, you're going to get this multiple. So I kind of thought like, how I'm starting to get ready to sell it. How can I increase the multiple? Obviously, I'm going to try to get as much sales as possible, and I'm going to try to cut some expenses to get the SDE as high as possible. But I thought, what is there another way to do it? So we started getting calls. I was called calls by 2 different companies that wanted to buy it, and one of them said, "Hey, we're in the health and personal care space. We only buy businesses on Amazon that are in this space. We roll them up. And then the plan is for us to either do an IPO or, offload it to somebody else." And the guy literally told me like, we're willing to offer you a 3 multiple. We're going to put all these businesses together, and then one day we can sell them for a 12x. And I was like, what? Okay. Well, why do I need you for that? So I, I'm not going to get more than 3x, but I might not be able to get 12x, but how can I get a little bit more? So I started contacting some of my direct competitors and said like, hey, what if we go to market together and sort of give the buyer a mini monopoly? And so, I not only have I never sold a business before, I also was working with some of my competitors, and we sort of needed somebody to sort of hold the whole group together. And so we got someone, and that was actually fortunate. So yeah.
So you decided that you were going to create a higher valuation by creating a higher net revenue for the combined companies?
Yeah, that's what that was my thought process behind it. And there were certain synergies. Working directly with a competitor, there were some things that they did better than me, and there were other things that I might have done better than them. We had the same products. I never knew what the cost of their products were. I never had access to their suppliers. Now, all of a sudden, you can bring all these things together. You can start negotiating with suppliers and say, hey, we are now these 3 different brands, or 2-3 different brands. You can't just increase your prices anymore. So I think there was a lot of synergies that we could have, that we could offer the buyer.
Ariel, when you decided that it was time to sell, what had worked through your mind at that point? And were there particular things in your business that had happened where you said, I'm ready to have that serious conversation?
Well, we saw that our business was on a really good trajectory upwards. We'd been growing at a really steady rate year over year. And we felt that, we saw that trajectory continuing, and we felt that our business was in a really good place at that time. We'd been working for a while to improve all of our listings, to really optimize everything, to improve our PPC, to really go through an intense optimization, knowing that we were, a year or 2 away from the sale. We really wanted to get that all set up. And we kind of felt that everything kind of just started hitting where we got really good category dominance in the categories we were in. And it was just kind of this feeling that, okay, the stars are kind of lining up. The business is growing. We're, like Janko mentioned, we had certain SDE goals in mind that if we're over this kind of SDE, we'll get a higher multiple. And so we kind of hit a lot of the metrics we had set out for ourselves and figured, okay, now's the time. Plus, there was also, I will say, it being 2022, we had spoken to people going back into 2021 and asking them for their feel of the market. And there was kind of a consensus that the market might start getting a little bit weaker, if we waited for too long. And so because of that concern, we also knew, okay, it's time to get things moving fast.
So you're at the point, all three of you, that it's time for you to be seriously looking at selling your business. Tony, you mentioned that you'd had a number of companies calling on your business, asking questions. Ariel, you said the same thing. This whole concept of how many people do you bring to the table before you start to get real competition and excitement around driving the valuation of your business up? How many companies did you seriously talk to? And how did you make sure you had enough companies that you were seriously talking to create that, hopefully, that upward demand for your business?
Well, we talked to three
Mhm.
sorry.
Please, Tony, please.
Yeah, so we talked to three companies, and felt that with three companies, I could at least triangulate on where they're coming in from a valuation standpoint. And we also had we didn't engage a broker, but we had some discussions with a broker just to take a look at our financials and get a sense of what multiples buyers are paying for businesses. So that kind of helped us benchmark, the approach that we took to sell a business.
And did you actually get a point through the triangulation that you started to be able to play these companies off each other, or at least have a better sense of what it is you needed to ask for?
We did, yeah. And we saw how their deal structure was in place. That enabled us to have that conversation with ultimately the buyer for our business.
Yep. And Janko, in your situation with multiple companies involved in the one sale, how did you bring enough suitors to the table to be able to have some sort of energy, excitement, and urgency?
Yeah, so I think if you're like at a $1 million SDE, I think there's quite a few businesses like that. But we rolled two competitors together, and we were at a place where I think we were just enough to get some real attention. So when we spoke to the buyers, we didn't speak with some of the junior level people in the M&A team. We would speak with the CEO. So we think like bringing that together, and I think we were the first ones in the space to do that. So if nothing else, these guys just want to see, what are these people doing? Like, what is going on here? So I think it was just interesting to, if nothing else, just to see what we were doing. So yeah.
Janko is modest. I think his business, that he was so smart to combine with a competitor. I don't think we've ever seen such an interest in the market in two businesses. The excitement was outstanding in his case.
I like this concept that by doing something unusual, you actually brought a more senior decision maker to the table at the buyers. And that, inherently is going to drive a little bit more urgency. That's interesting. Ariel, in your situation, how did you create a situation where there were enough people at the table that you could create an urgency and a need for hopefully higher multiples for your business?
Yeah, so we did a lot of prep work ahead of time. Again, we wanted to kind of gauge the market and just how much interest there was. So we reached out to maybe 5 aggregators just to kind of start having conversations and get their feedback to see if our business was ready. We reached out to pretty much all the brokers and investment bankers, the major ones, to kind of find the best partner to go with. And then when we actually went to market, I think I had conversations with well over a dozen companies. And so I think that, again, we just felt that we had a very strong business, a good story, and, a good, a good level of SDE and category leadership that, it kind of generated the interest. Plus, we did a lot of homework ahead of time to reach out, craft everything, and, and present ourselves well.
All three of you ended up selling to an aggregator. I'd like to hear a little bit more around what other types of buyers were at the table interested in what you were doing, or was it really an aggregator opportunity at that point? Were there other strategics? Were there PE firms? Were there big brands? And what kinds of non-aggregator interest was there?
I can start on this one. Yeah, so we had one strategic buyer in the mix, and I think the aggregators just moved a lot quicker to be willing to put an LOI out there. And I think we were in a space where things didn't happen so fast. So, 2 weeks into due diligence, the strategic buyer couldn't stop calling, and I was like, I can't really speak to you right now. So,
Right.
I think the aggregators just moved a lot faster, and would have been interesting to see what we would have gotten there, but we never got there.
Tony or Ariel?
We were in a similar situation where we had one strategic buyer in the mix, in addition to we had a dozen aggregators. And, kind of similar, we were, I think, speaking to the CEO of it was actually a major competitor of ours, who's kind of a household name. And, there was conversations with, senior level management there. But in the end of the day, we found that they were also going to be moving much slower, and we had, aggregators jumping at the bit, and we felt like we had good offers. And so we didn't want to slow everything down and then also wait for market risks of, letting it get away from us.
So each of you had the opportunity to talk with brokers, potentially with other companies that had sold before you went to market. As you had those discovery conversations with folks, what types of considerations did you start to put into your mix around how you wanted to structure a deal, things that you hadn't been necessarily thinking about beforehand? And again, I don't want to put any of you in an uncomfortable position to talk about stuff that's too specific, but are there characteristics of the way you structured your deal that you're glad you had certain conversations either with bankers, with brokers, with other sellers, just to baseline and think through how do you structure a deal that's going to put the right incentives in place for you?
I'll jump in. I think what we did is when we looked at some of the deals coming in, we put a baseline spreadsheet together of what would it be like if we were continuing to build our business, and what would the growth look like, and what would we be paying from an SDE standpoint if we continue to manage the business from that standpoint. And when you're looking at either all cash or cash and something on the back end.
Yep.
Well, that's when we started mapping out what does it look like for, what's the probability of them actually reaching those goals. And then I did a bit of a gap analysis and at best efforts, trying to figure out could they actually reach those goals. And that really helped structure how Carol and I decided to eventually sell the business.
Ariel and Janko, in your situations, what characteristics did you bring to your, to escalate your negotiation skills?
I'll say that, we being with one of the competitors and being a bigger deal together really helped us, get an extra year on the participation agreement. I don't think we would have gotten an extra year if we weren't together. So that was really beneficial. I think, at the time, when you speak to a buyer and they're an aggregator and it's 2021 and you speak to them and they say, hey, we're 10xing here. We're 10xing brands and you're sort of really impressed by that. But then you think, wait, you've only been around for 6 months, and you might have 10xed your workforce, but have you actually 10xed a brand? So to us, it was kind of important to get a big chunk up front. And with the synergies that we brought as two competitors together, we wanted to give them, we thought it would be great if we could give them time to really find their footing. And I think that's why we really we really wanted an additional year, and that's what we got.
Ariel, in your situation, what can you share?
It was a big question for us as far as the best structure, because we got a lot of different offers and they all had different kinds of setups. And so it was challenging to compare them, but this is actually where Fortinet, I will say, was very helpful in working with us, where they kind of built out an Excel document for us. It's a pretty complicated formula, is basically saying, okay, here's all the different offers. Here's a certain weighting, cash gets 100%. And then if there's a stability payment, there's a little bit of more risk, or sorry, I guess if there's a delayed payment, that would be the next best thing, where there's a little bit more risk than a stability payment, and then an earnout, where they're basically kind of creating this complicated, it got to be a pretty intensive formula, basically, and kind of putting different discounts on all the offers so that we could really compare one next to the other. And then, changing, okay, based on if our business grows by 30, 50, whatever percent in the coming years, how would that line up? And we were able to use that, I think, to push effectively during the negotiations to say, okay, guys, this looks good, but actually when you dig into the numbers, we've got better offers elsewhere, and we were able to, create a competitive dynamic that way. And then, Fortinet also advised us very much to be pushing for cash up front, and was able to bring a lot of the offers we got from heavier on the back end to heavier on the front end, which is always a good thing, I think.
So you've got offers on the table, just as these companies are looking at your business and have done that before they even start talking to you. How did you go and research these companies that were looking to make offers? How did you figure out how likely they were to be able to hit some of those back end numbers? How do you figure out if they're actually good at operating and building these types of businesses? I'm curious what tools you use to be able to dig in and figure out how to do diligence on the buyer.
For us, we had there were kind of a few leading buyers we were considering toward the end of the process. We asked people we knew, whether it was Fortinet or other people from the industry. We did a little bit of asking about their reputations. And so that was a big thing for us, and we were able to find out interesting things that definitely pushed us more in the direction of one buyer and less in the direction of another, based on things we'd heard about the process of getting a deal done, how serious they were, how effective their organization was at operating. We actually ended up doing a call with the CEO of the aggregator who ended up purchasing us. And that was really helpful to kind of get a sense from a senior level at how they're running their business, how they're looking at it, how they're set up, their strategy, their people. And that gave us confidence in the buyer that we ended up going with, that, okay, we can see how this can work and this can be successful. So that was helpful for us.
Tony and Janko, how did you do diligence on the buyers?
Well, it was early days for us. So we had conversations with their operational team just to get an understanding of, what's their background, how have they brought managed logistics and operations of a business in the past. The aggregator that we sold to had been, I call it a startup. A startup to me is probably about 2-3 years, or however long it needs to take as a startup. They've been around for a little while, but they were, like most startups, they've raised their capital and now they're backfilling with staff, and they're trying to grow as fast as possible with staff and systems in place. So we felt comfortable with not just the sales team that we were talking to initially to buy our business, but also the operational team and the marketing teams that we spoke to.
In your situation, Janko?
Yeah, I mean, I think selling my first business, you're sort of just as excited to sell it, and you're out there sort of thinking you've got to do Shark Tank presentations, but not knowing you're the pretty girl at the ball. So we definitely looked at the buyers and try to see what were they doing, but they were doing a lot of things very good, which was raising money, but they haven't been around for very long, so you couldn't really see what they were doing. I think if I could do it a little bit differently, and someone says something like, "We are 10xing brands," I would just say, "Show me, show me what you have done." That's what I would have done differently. I think I would say that a lot more. Now.
So tell me a little bit. You got certain multiples. Things have changed a little bit when you sold versus what things might look like today, or at least there's a perception that things have changed. I'm curious, if you had to do the deal all over again, whether it's the amount that you ultimately got or the way that you got paid for what you sold, how would you think about this today, given what you know about companies that are in fact buying these companies? What would you do differently? And Ariel, I'm not going to start with you because you just sold, and I hope that you're not already having seller's remorse.
Not yet.
I would say, I also worked at an aggregator for 7 months. So I didn't just see my own deal. I saw a few deals, and I saw the operation on 30 plus brands. I think what I would have done differently, what I've seen works the best is where a seller is still involved in some way. and is compensated for their time there in a significant way as well, so that the two really work together post-close. I think if I did it again, I would bring myself in a bit more, to make sure that participation is being hit, because I can help the buyer a lot more. So I think that's what I would have liked to done different.
What do you mean by helping the buyer? What kinds of things do you think you could have been particularly helpful in doing that the buyer may or may not have been as capable as you?
I think every brand is different. I think we tend, maybe from the outside, when you think someone has an Amazon brand, they're all the same. Each brand is so unique. You can't just buy 50 brands and think you can just throw a brand manager in there and they'll be able to run 5 of them. Each one is unique. So not only were we two competitors that came together, I knew exactly what I would do with their brand, the things that they were not so good at that I might have been better at, that I could have helped with that immediately. And there were things that we were strong at that really helped us move the needle that I would have liked to continue doing. So I think I would have liked to be a part of that a bit more.
Tony, in your situation, if you could do the sale all over again or the post sale all over again, what would you do differently?
We were very happy with our valuation and what we got from our deal. I think I probably, I might do the same thing again. However, I probably would be more in the driver's seat than, especially in today's market. I may not be as approached as much as I was back in 2020.
Mm-hmm.
So perhaps I'd be a little bit more in the driver's seat as to how I would approach the selling process. Either working with a partner to help take our business and represent our brand, as well as, kind of to what Janko just said, is, I had the opportunity to work with a brand for 10 months after we sold, and that was through kind of consulting and doing the marketing aspects of it. But I also saw how they're bringing brand managers in that were very young in their roles.
Mm-hmm.
And I felt like I was onboarding the brand managers, even though it was for my product or our brand, as well as some of the other brands. And so there is a lot of domain expertise that each seller has that buyer just doesn't have. And that doesn't translate when you're translating all the assets. It's how you speak to your suppliers. It's the nuances of your marketing that your competitive space. And that takes a while to really get a sense of how that brand actually behaves in the market.
Mm-hmm.
So yeah, I think having some involvement, especially when there's a payout involved, is being able to influence that and trying to improve the sales revenues. So.
I think, by the way, it's, Janko shared with me in one of the conversations that he's one of the best sellers, 8 figures business that he had, and he was working with an aggregator, right, where you both managed some of the brand that they bought and the seller wasn't there anymore. And you were also overseeing sellers who were still in the business and managing the businesses, and you saw how they were, doing a better job. So it's about. So tell us maybe about that part and this experience comparing the two directly under the same roof.
Yeah. So I think it's just having the humility to say, like, I can't do such a good job as the seller. He's been doing it for 5 years. He knows everything out of his head. There's no SOP that he needs to read. Mm-hmm. And if we partnered with a seller and they were incentivized a lot with additional sales and additional profit to stay on, like, all I tried to do in that case was just try to take away some of the red tape, and learn from them and shadow them and see, like, hey, okay, in 2 years, maybe 1 year. Maybe I could have your knowledge. Maybe I could have a little bit more, but 3 months just to work with a seller, I don't think is enough at all. I don't think those things that Tony mentioned. you can pass on as part of the assets. I don't think that's possible. And so yeah, in my opinion, so that's extremely valuable to have a seller be involved in that way. You could have a brand manager that runs some of the brands, but it's going to take time for it to get that flywheel effect, maybe a year before you really know the brand and you can really grow it.
If I look at aggregators today, yes, there's a brand manager at the aggregator, but there's a supply chain person, and there may be a advertising person and another person and another person. You've got all this fractional support of your brand. Historically, you probably each were responsible for all those things and knew how they all interconnected. And so being able to figure out how do you take what you do, tease it out, and now have 10 different people doing bits and pieces of it, but also make sure those 10 people are talking to each other. I can see that being the potential for a lot of balls in the air that fall on the ground.
Definitely. Yeah. And everyone thinks something that might be on the fringe, oh, that's his job. I'm not gonna, I don't want to step on his toes. I don't want to make that person angry by taking this over. Well, if you're running the business, you're going to say, hey, I'm going to call the supplier right now. It's 3 a.m. their time, but I'm going to call until they pick up because this needs to be sorted out right now. Even if it's on a Friday, but you talk to sometimes the brand manager say, oh, this and this happened. They're like, yeah, I'll get to it Monday. It's weekend, but we're sorting this out right now. So I think there might be a difference in incentives and, chips on the table that might not be yours. And maybe you don't care that much.
To be fair, this dynamic doesn't necessarily happen only at an aggregator. This can happen at any buyer organization that's taking its time to learn how to essentially become the brand. It does take time to do that. And so that, as I hear all of you talk this through, I think to myself, for people who are listening today, who are brand owners, considering the possibility of selling their business, yes, it's delightful to get a check and go off and live on the islands, but realistically, in order to make sure the handoff goes smoothly, it is potentially a reasonable expectation that the brand owners would be involved for longer than just a few weeks to make sure that handoff goes smoothly and maximize the value of the company on the back end.
Yeah.
I agree.
So
We actually did a little thing on that where we actually incentivize, because I'd like to try and be efficient with my time, so to both be keeping an eye on the business going forward to hopefully get the earnout, but also to kind of be time efficient. And so we actually set up a little incentive structure for some of our VAs who have been involved and who are continuing with us into our new business. They didn't continue with the brand, but we're asking them to kind of keep an eye on things. And if the brand does well, then they'll do well. Mm-hmm. And so we've kind of set up that kind of structure to help keep some extra eyes on it for people who are really inside and, also free up my time. So I'm not going to go live on an island, but frees me up to do other things.
For sure. So we were talking about multiples. Maybe let's return to that for a second. I'm curious about you, Tony, because you've sold a while ago. Do you think that if you sold, with everything you're hearing about the industry, and you've worked with one of the aggregator for a while as well, do you feel that you would have gotten the same multiple today, higher, lower? What do you think? And that's not a question for Ariel because it's very recent, but maybe to you.
Yeah, I think we probably would have gotten a similar multiple today as we got back in 2020. I think that we came in a little bit above average from on the higher end of the multiples back in 2020, which probably would be right in the mix where it is today from a multiple standpoint. And I think that's just because, all things being equal, the business trajectory is going up, and the operations of the business is well, like a well-oiled machine. I think that there's those companies that are operating that way, they'll get the good multiples. So I feel we would get the same.
Yeah, I think the better your business is, and it's as difficult, or it takes as many resources to run a business that is at a 500 STE. Maybe it takes a little bit more to run one that has at $2 million SDE. So I think if you could keep on growing your business and you can sell it, those multiples are still out there, but you need, I think, from my point of view, still, you need to have a healthy business. And if we kept on growing it at the pace that we did a year ago and we sold today, I think we would have still gotten the same multiple.
Mm-hmm.
Well, I'm curious, Yael, you're involved in deals every day today, and you've been able to see how things have changed over time. I'm curious, when you compare what Ariel did versus the types of strategies that Janko and Tony took, what can we take away from this and apply to opportunities for brands to sell their businesses today? What commonalities are still very much in place? What truths are still very much in place that apply, that you see brands coming to you either make bad decisions or come prepared with good decisions?
Yeah, I think all of that affects the multiple. If we look at a year ago versus now, some of the things that buyer were looking at are still very, very common today. One of the factors, there's a list of factors that determine the multiples that you're going to get and the valuation at the end and how good the exit will be. They're looking at the category. And the size of the market. They're looking at growth, and they're looking at the margins. Growth and margins are the two factors that we feel today are probably the most important out of all the different factors. And so I think that if we look what we had back then and what's happening today, it's a lot about timing. And the timing should be when the business is as healthy as it can be. So if the business is growing, there's a nice growth, and margins are above, let's say, 18%, there will be a very good demand for the business even today. And that's something that every time I say it surprises many people. But Ariel here can also maybe share. There's a difference between businesses that are maybe going down or having difficulties, had a difficult year in 2021, and businesses that are growing very fast. So it's still feels like a seller's market for those businesses. And the sellers on their side, the most difficult decision is when to sell and how to get the business to a point where it's attractive enough and you get the highest multiples.
When you think about private label brands a year ago going to market versus private label brands going to market today, what do you say, Yael, in terms of the big differences around either the quality of the companies going to market or the preparedness? To take me through what has had to change for the companies that do eventually sell today versus what they could get away with a year ago?
Yeah, so buyers are more picky than they were a year ago. They focus more on specific categories, so they wouldn't buy everything from any category. So you would see them focusing on home, on outdoor, or certain businesses. They also attest that they prefer strong brand and a good brand cohesiveness and not just random products. They like to see repeated sales. So anything around a subscribe and save has a lot of demand. So you see some changes compared to last year, but the businesses like Janko then and today, exactly the same process. I think the big difference is with the businesses that are suffering. The big difference is for those suffering, from a decline or low margins. Low margins is something that we've been seeing, unfortunately, in the last year for many businesses. So on my side, if I compare, I think that maybe the percentage of the businesses that are ready to sell is lower than last year. Because they all want to get sold when they'll get a good multiple, and it's hard to get there. So that's a change that we've been seeing, but when you get there, the result is very similar.
So our three colleagues all sold to aggregators. I'd love your take, Al, in terms of who are the buyers that are at the trough, so to speak, today.
Yeah.
How has the mix changed? We've heard about the vast demise of aggregators. You know, some aggregators are still buying, but who else has come back to the table, or who else is at the table that 2 years ago it was unusual for them to be getting a large number of deals?
Yeah, so there is a change there. And that's actually a positive change, maybe over the last 6 months. We see more and more PEs getting interested and working faster. What Janko and Ariel have described is something that we see again and again. Aggregators are very focused. They work pretty fast. This is what they do on a daily basis. Whereas PEs and strategic buyers that we're seeing now more and more, they would need more time. They can't get an LOI within a week. So when you go to the process, you have to approach them earlier. You start an entire process, and then they get to know you, and now they get used to it, and they start being more active. So it's been a process. It took a year or two to get them there, and now they're more active in bidding on these businesses. So more strategic buyers, more PEs, and aggregators are still very, very active. There's the few that we all know that are not buying right now, and they get most of the headlines, but there's still 60, 70, 80 aggregators that are buying, and they're active. So that's where we are.
So a question for Tony and Janko, in light of what Yael has shared with us, any additional insights that you can provide as a past seller of your brand in terms of things that you learned once you started working with the brands or with additional brands after selling your business? What recommendations would you make given what you're seeing in terms of the changing attitudes of aggregators?
I would say that the ones that I've seen were the most successful, that are really still growing 50%, 100% year over year, as a seller still in control and running the things. Not running the things, they've got to go through a few things. If they want to place a purchase order, large purchase order, then they've got to provide a bit more proof. They can't just say, I want to buy this right now. But what I'm seeing, what I saw at the aggregator that I worked at is, if I think it's a much more attractive deal for them too, if they can really incentivize the seller to stay on in some way. Say each additional sales, you get a cut of that. I think that makes sense to structure it more like that, and they'll be more willing to do the deal then and pay a higher multiple, because their investment is safer, since you're only going to be incentivized for the additional sales that you bring and the additional growth.
What cut would make you want to go for it?
No, I mean, what I've seen worked, I've seen this deal is 20% of additional sales. I know that sounds crazy, but maybe that means that on these products, these products might break even for a year or two. But I would also say, do you want the brand to grow 100% year over year? The additional sales that you get, you might break even on those, but at least the other business is also growing at 100% year over year. Or would you just say, no, we want to give you, and this was actually offered to me, 1% of extra sales, and that wasn't really worth my time at all. Now, what are you going to do if the business is 30% down year over year? I think you got to choose your battles, and I do think by incentivizing the seller really to stick it out and do everything they can to grow the business with the new resources that the aggregator brings, to me, I see that as going in the right direction.
Tony, in your situation working with brands, what advice would you give them given what you're seeing today?
Well, I see that aggregators are crossing the chasm now, right? They first, a whole bunch of them came to the market. There's some that have challenges moving forward, but they all have their learnings. And kind of to what Janko is saying is those brands that are now, or those aggregators that are now incorporating more of the seller, through what Janko's seen, they're growing. And also the aggregators are now building the systems, or should now start having systems in place to be more efficient, to be able to grow the brands. And I think that's what buyers should be looking for is there a possibility or how do you structure the deal so that they can participate in the upside, but also participate in some level of active management and be compensated for that. But also do the research that what kind of systems do they truly have in place to make it more efficient so that they can actually run the business. I mean, our business was extremely efficient. We were 2 people, right? And now the aggregator has 7 to 10 people touching it and cross-functional teams that need to communicate through weekly meetings. That's not as efficient. So what kind of technology have they really enabled to make the overall business that much more efficient to let it grow? And what kind of further investment are they going to do into the business? Are they adding more investment dollars to increase marketing? And what other channels of marketing are they going to expand the business into that we couldn't, for example? I think those are some things that that buyers should be asking those kind of questions and seeing if they can structure a deal that way.
Ariel, what would you recommend to sellers or to brand owners today that are thinking of selling their business? Your experience is recent. I'm sure you made a few little mistakes along the way, but you also found great success. What would you say to somebody who says, "Hey, Ariel, I heard you speak and you sold your business recently. You're sort of the odd guy here to still get a high multiple." How would you help someone walk through the whole question of, is it time for them to go to market?
I'd say preparation is really, really important. I did a little calculation in terms of how much profit did we make, in the 5.5 years that we were running the business,
Yep.
and then how much did we actually take home when we sold the business? And what I saw was I think about 25% of the profits we made were during the 5.5 years that we built, and then about 75% of the profit was when we actually sold the business. And so when you look at it like that, basically the sale of the business for us was kind of like the grand finale of this past 5.5 years. Everything kind of came down to it. Plus, not even to mention that, but if you look at the amount of money you're actually keeping in your pocket, during the 5.5 years you're building the business, you're paying ordinary income, which is a higher tax rate compared to capital gains, which is a lower tax rate. Plus, most of the money over 5.5 years we were reinvesting into the business, so we didn't even take it out, even if it was profits on paper. So as far as the financial impact of really doing a sale well, I don't think you can overstate it. And so kind of understanding how consequential that would be, I really spent a lot of time preparing for that sale, well in advance and pretty diligently. I kind of looked at it as the last phase of the Amazon journey. So in the beginning, I was learning how to identify a product, how to market, how to, grow a business, how to put everything together. I really spent a lot of time learning for the last phase, which is how to sell a business well. And so specific things, I think everyone who's on this webinar, learning from, people who have kind of been there and done it. I read a book, the Exitpreneur's Playbook, which I found to be really helpful just to understand kind of the terms and terminology and what's important to people on ad backs, the ins and outs. And we met with a lot of, like I mentioned before, a lot of brokers and investment bankers and a few aggregators to really kind of understand where we were and in their eyes and what needed to be improved. And then we also had goals, saying, okay, here's where we want to be. When we sell the business, we want to be at least this SDE level. We want to be at least this profit margin. We want to, knowing what was important to the buyers. And then that allowed us to work backwards and say, okay, if we're going to do this, we want to make sure that our trailing 12 months are really, optimized in every way. And so we were able to be strategic. What levers are we pulling, as far as PPC, as far as ranking, as far as, page optimization? What are we doing ahead of time to really allow for that trailing 12 months, around this point where we want to sell, to really kind of hit all the marks and kind of have everything line up at the right time. So kind of a lot of thought, a lot of preparation, and really take it seriously, I would say.
Thank you for that comprehensive answer, Ariel. Thank you kindly. Yale, I want to wrap up our conversation today by asking some of the questions that we asked at the beginning of the conversation. Qualify for me, if a seller comes to you, or a prospective seller comes to you and says, is it the right time for me to sell my business today, given everything that I'm hearing? How do you help them think through what they need to evaluate to answer that question?
Yeah, I start with explaining where the market is. We found ourselves doing that a lot recently because, of everything they hear. So yes, multiples went down. The 7x cash that we used to get 6 months ago, we don't get there anymore, but 5x is still a very good multiple for an online business. And don't forget, we're talking about, SDE, and that's just the cash, not including earnouts. So if you include the earnouts, you could even get to more than that, maybe 6x or more. DTC businesses can get to over 10x sometimes. So first I start by explaining this is the market, but this is a market for, for businesses that meet certain criterias. If the business isn't there, the demand is here. The big question is, what do you bring to the table? And so we look at the business, we look at the different criterias. If the business is there, and as I said earlier, if it's really growing, if there are good margins, you don't have particular health problems, no trademark issues and things like that, then you could sell your business if you want. The way for us to do it is, of course, a competitive process, getting all the buyers to see your business, getting strategic buyers to see your business, do a full process to make sure that you got to the maximum of your particular business. So these are the discussions that we're having, and then we break it into the different factors and we analyze the businesses. If you're not there, how do we improve that?
So I want to wrap up a question to everyone here on the call. I'll start with our three sellers. If I'm a brand and I'm sitting on the fence because I'm not sure if it's the right time for me to sell my business, how would you help me think that through? And I'm not asking for a 10-hour consulting gig. I'm asking you, what are some of the things that you would say to me that I need to work through, both financially and psychologically, to get to the point where I say I am ready to sell my business? Tony, do you want to start this for us?
Sure. I'd first start mapping out what are the risks to the business going forward. If you're to continue managing the business, what risks are you facing? Are you constantly facing the whack-a-mole with Amazon and shutdowns of products? And
yep.
Is your main product at risk? What's the competitive space as a risk? So once you start mapping out the risks for you to continue managing the business, what's your passion for continuing to manage the business? Are you still passionate and fully engaged in the business? Because you may not have 7-person team to manage all aspects of the business. You and maybe a partner are probably managing it. So that energy and passion has to continue to be there. And then, start getting and talking to the right groups, kind of like Ariel has done, to get an understanding of what's the appetite for buying the business. And can you get the multiple that you're looking for? Like, understand what multiple you should expect in the marketplace. And is it worth now selling for your future earnings if you're rather than continuing to run the business? I'd say those are kind of the key things that I would evaluate and tell somebody to consider.
Janko, what would you add to that?
I would add, think about worst case scenarios and think, what could you lose? You're sitting on a healthy business and you're maybe sitting on a chunk load of inventory. If you've got 20,000 silicone spatulas, what are you going to do with them if worst case scenario, right? And wouldn't it be better to just, live a little bit? That's the first thing. The second thing that I would say is, really, as you talk to other groups, talk to other sellers, and talk to, really think about the tax implications as well. You can get, I should be careful, but you could get creative with how you get your company ready to sell to pay a lot less taxes. I think that's what I would do as well. It's not just about, at the end of the day, after you sell, what are you going to keep? And I would strongly recommend, because I didn't do that. If I could do things over again, I would have. So look at the tax implications.
So talking to a tax attorney or someone who's helped brands do this before.
Are you asking if I have?
No. how would you actually do that? How would you actually think this through? You know, bring in a tax expert to help you think through how to structure the deal, how to structure your ownership, and so on.
I mean, when you're part of these groups and you're talking to people that have done it before, you know, they know exactly. They can tell you the lawyer to go and talk to. You can read books about it. You know,
Yep.
Read Nomad Capitalist. You know how you can move somewhere to make your company a better thing to sell your company. Like just it'll take you a day to read that book, and you'll start thinking, okay, maybe I should get a consultant just to talk me through. Like if I want to sell a year from now, really cool things to pay a lot less tax.
Ariel, other things that you would recommend to a seller who's thinking, do I or don't I go to market at this point?
I think that we covered a lot of really good points. I would just, for me, one of the big things was knowing that as long as the business is going up, I'm in good shape. But as soon as the business starts going down, I'm in a really, really bad shape. And so it's kind of this like 0 or 1. And I knew that, okay, I've got a successful business now. Hopefully it'll continue going that way. I think it will. But, once it gets to the point that if something, Amazon is fickle and Amazon is volatile, and a lot of nasty things happen sometimes. And so I figured, okay, I would, advise you to think if you're at a place where you're happy now and things are, and lining up and you're doing your work and, you're, hitting those metrics that will allow you to have a premium multiple, then be careful not to wait too long, because it can pass you by, and if you're on the down, and it's going to take you a long time to turn that around again and be at a place where you could sell.
Yeah.
Yale, you're in the business of helping companies sell their business, and so if someone were to ask you, is it time to sell, naturally one might expect a broker or banker would say, sure, we'd love to have your business today. How do you help companies think through whether today or tomorrow or sometime in the future is the right time?
Actually, out of maybe 10, I don't know, 1 or 2, I would answer that it's the right time to sell. If you look at, the businesses today and where they are, the right time, the momentum is extremely important. One of the things we started doing maybe 3 years ago was to get early, to start preparing the businesses early, even a year before the sale. Because we realized that the impact was huge. So we start with just the financials. You prepare the financials and you show the seller, this is where you are, and that's the benchmark. And if we look at your tacos, it's completely off. Or if you look at this, if you look at that, this isn't good. This is amazing. And so they can focus during that year to improve exactly these points, and we of course bring our experience, the sellers in our team. So that's one part, and then there's the legal part that many kind of forget about, and Janko touched the taxes. Super important to get prepared. Many of the overseas sellers have serious structures that they could work on if they start early enough. And then there are things that you can do now, you can't do it in a year, and that's, the trademark. So, wearing my trademark lawyer hat for a second, you can't have a deal if you don't have, if you haven't protected your brand in the specific category within the specific countries. And we've had deals, 2 years ago where the trademark was protected only in the US. And not in Europe, where it was 20% of the sales, and that stopped the deal. We had to move to the next buyer. So think about that and start preparing early to make sure all the preparation is done, and you don't fall on the small things like a trademark.
Very, very good. Yale, anything else that you'd like to cover as part of our conversation this afternoon?
No, I think, on our side, it's always when we learn the market, we always start with the sellers. We understand where they are. We ask questions about their needs, what they want, and where they want their brand to go. There's a lot of discussions now about, okay, I've got to a certain point. I start to become bored with Amazon. What do I do? Or I sold. What's now? What do I do? Do I create another brand? Is it easy to create another brand now with everything that's happening? So really the purpose of this webinar was to hear the voice of the seller, at least the three that are here. And, we'll have a series of this webinar, and hopefully we can bring, some value.
Very good. Well, I want to thank Tony and Yanko and Ariel for joining us today and sharing insights on their experience going through the sales process. Yael, thank you for inviting me to participate in hosting today's discussion with you and your team. We look forward to hopefully, everyone makes better decisions with the content that we've heard today, and we look forward to seeing you again soon.
Thank you, James. Thanks very much. Bye, everyone.
Thank you. All right.
Great.
Bye-bye.
Thank you.
Bye-bye.
Bye-bye.
Thanks, guys. Bye-bye.